Hey everyone, in this video I've got one growth stock that's down 81% off the high that I think makes an excellent investment right now. I think you can buy this stock hand over fist. Now in this video I'll go over what the growth stock is, why it's down so much, and why I still think it makes an excellent investment. So without further ado, let's see what this growth stock is. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, the growth stock I'm talking about here is PayPal. PayPal is down 80.87% off the high, and it's given investors a tough time for more than a year now, as many investors, including myself, have thought this stock has been undervalued, but it's remained undervalued and even gotten more undervalued. Now, I've recommended this stock for a while, and I've owned this stock for a while. I still own PayPal stock, and I'm reiterating my recommendation here, as a lot of investors were asking me, what's going on with PayPal? Is it still a buy? And yes, I still think it's a buy, while I will admit it has some headwinds. Let me go over what those are. Now, the first headwind that I'm concerned with right now is PayPal's declining active accounts. In its latest quarter, active accounts decreased by 2.5 million. So they lost essentially 2.5 million active accounts. Now, if I were to give you a trend of all of its active accounts for the last 4 quarters, you would see a continuous streak of PayPal losing millions of active accounts every quarter for several quarters now. So it's on a streak, and that's risky because as an investor, you're wondering, how much longer will this go? How many more quarters will they continue losing active accounts? Will they lose more active accounts? Will that trend accelerate? All of those are increasing risks for PayPal stock. Now, management says that they're losing primarily unengaged accounts, lower value accounts that we're not spending as often. We're not using their PayPal account as often, and so PayPal stopped sending them promotions and incentives to try and get them to engage. PayPal chose to let them go. If they're not using PayPal that often, that's all right. We don't need these lower value customers. Let's go after the higher value customers, and that's precisely what PayPal's been doing. However, that's coming at the expense of these continued losses on active accounts. Another headwind had been PayPal's transaction margin. Now, PayPal has several forms of payment processing. Its most notable one is the PayPal branded checkout. The other one is when you check out with Braintree, which is unbranded, and PayPal gets a lower profit margin on those checkouts. Well, lately, more of its business is coming through that Braintree, the unbranded checkout version, and that's coming at a lower transaction margin. So that's bringing down PayPal's margins. Thankfully, that reversed in the latest quarter, where transaction margin dollars improved by 3.5 basis points sequentially. This had been following the same trend of its active accounts. It had just been going downward. So that was another risk that I was highlighting and keeping an eye on. Thankfully, that reversed. So that was one thing that moved in the right direction for PayPal in its latest quarter. And the big thing, the reason why PayPal's stock price fell immediately after it announced its latest quarterly earnings results, was the guidance for 2024. Management said that they're expecting earnings per share to be flat year over year, zero earnings growth, whereas 2023, the company delivered solid, more than double-digit earnings growth. So that was a big headwind. Although I will note that management in the conference call that followed this guidance said that they are implementing some strategies that should boost the earnings per share, but they don't want to account for that just yet before they see any results. So they said if they see those results come in the first and second quarter, they're not ashamed to upgrade their guidance in the first or second quarter of 2024. So it seems like they're more likely to upgrade this guidance rather than downgrade. So they're more likely to beat this forecast than not beat the forecast. So in other words, this was a conservative guidance from PayPal management, according to what they said in the conference call that followed this earnings outlook. Now, they're also stating they're going to generate $5 billion in free cash flow, and they're going to use it to buy back stock. So they're going to be out in the market buying back their own shares. Typically, I see that as a sign that management thinks their shares are undervalued. They're spending $5 billion to buy them back. That's a strong signal that you think this asset is undervalued. A lot more so than when you hear companies just talk about how they think their shares are undervalued and they're just trying to go on a talking spree, trying to talk the stock price up. Here, the management is spending $5 billion buying the stock. That's a stronger signal than just trying to talk. So I weigh this much higher than just empty words. And so there's some headwinds here, as I shared with you. Risks are elevated with PayPal stock, but how much of that is already priced in, right? How much of that is already accounted for in this 81% drawdown in PayPal stock? Could the sell-off be overdone? That's what I think. I think the sell-off is overdone, and I think there's good value here in PayPal at its current valuation. Now, if you look back longer term, the stock price has rarely been this cheap. It's trading at a forward price to earnings of 10.51, and you could go back all the way to January of 2021, and you've rarely had an opportunity to buy this stock at this low of a valuation. So valuation is there. It's down. It's down big time to offset all of those headwinds, right? It's accounted for in the valuation, arguably. Now, I could be wrong. There could be more downside for PayPal stock, but it's my assumption that those headwinds that I've discussed and I've been following for several years now with PayPal, I feel they're overdone and they're overblown, and I feel that there's good value here, good risk versus reward at these valuations. The company has done a good job growing revenue over the last 5 years, and I could go back longer. I could go back 10 years. You can see revenue at $29.77 billion, up from $8 billion, has grown by multiples. Remember, PayPal generates more revenue when people spend more money online. So longer term, people are shifting more of their spending online. That's a nice tailwind for PayPal longer term. Over the last year, 2 years, that's been a headwind because remember, when we were stuck at home under COVID lockdowns, we spent so much money online and at home that right now people are unleashing pent-up demand to get outside, to go spend money away from home, to go travel, to go to restaurants, bars, theme parks, concerts. And these are all areas where PayPal has a significantly lower market share. So that's been hurting PayPal, but that's just a near-term thing. People are going to reverse back to normal spending habits once they unleash this pent-up demand, and that's where PayPal will benefit from that longer-term tailwind of more spending happening online. It's because it's just so much more convenient to shop online than it is to shop in person. And that's not going to change anytime soon. And then PayPal's operating profit margin, I mean, it's not increasing, but it's also not decreasing. It's been volatile, but the company's been able to keep its operating profit margin in the double digits for the better part of this last decade, ending at 16.61% here. And given management's latest initiatives, they feel that they can increase this operating profit margin. Now, that's too early to tell, but it's reasonable to assume their operating profit margin will remain in the double digits between this 13.5% and 18% range as it has been in the last decade. And if they catch that tailwind of more spending happening online, then that's something that could boost PayPal longer term. So I still like PayPal stock. I think it's an excellent investment at current valuations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.